Welcome back. This is Lab 1.5, Business 253, and this is question number 3 in Lab 1.5. And we're recording the transactions that are listed in the table below into the accounting equation shown here. So the first transaction, the business issued shares to shareholders for $20,000. That means that cash has an asset. You need to fill in the asset here. So cash goes up by 20,000, and so we enter that, and the share capital went up by 20,000. Now we've got some information here. Both of those are increased by 20,000, and it says that if equity is affected, and it is because we've got share capital here, we need to put in an explanation. So we go to equity, and there we go, investment, and that takes care of the first transaction. Then it says we purchase 700 of supplies on credit, so that means that we have a new asset of inventory. So assets, I guess supplies, it says supplies, right? So we have supplies, new supplies of 700. So that's an increase. We're supposed to put in increases with positive numbers and decreases with negative numbers. And it says we purchased on credit, so that means our liability went up by 700 as well. So now we have a balance of 20,000 in cash, 700 in supplies, 700 in we need to put in the liability here. This would be, I guess, accounts payable. I guess we need to come up with a total here first. Okay, there's the total. And we need to put in the kind of liability we have here. So liability would presumably be accounts payable. So when it says on credit, purchased on credit means accounts receivable. Paid, purchased on credit means accounts payable. Sold on credit means that it's accounts receivable. And the retained earnings has a balance of 0. Okay. Now, then it says Bentley collected $6,500 for commissions earned today, so that means our cash is going to go up by $6,500. And no effect on supplies or accounts payable. It does affect retained earnings though by $6,500, and we need to tell Lyrics that that was because of revenue, and it would be commissions earned. Here it says that if a transaction does not affect equity, no explanation is required. It says that right here. So we don't actually need to put in an explanation for that one. All right, so our balance now is going to be 20,000 plus the 6,500, and the next is going to be 700 because we didn't add anything. That'll be 700 as well. This is 20,000. And this is going to be 6,500 because 6,500 plus nothing is 6,500. Equation transaction D. We paid bi-weekly salaries of 4,500, so that means we put in our first negative number. And of course that's an expense, so it's going to reduce the retained earnings. And we need to put in an expense here, and the expense is going to be salaries expense, office salaries expense right there. So once again, let's do some balancing. 26,500 minus 4,500 gives us a balance of 22,000. 700, whoops, 700 there, 700 there, 20,000 there, and 6,500 minus 4,500 is the balance in retained earnings. Kind of getting the hang of it, I hope. Bentley used $200 cash and $700 of credit to purchase $900 of supplies. So their cash went down by 200. Their supplies went up by 900. So it went up by 900. And accounts payable is the balance that it went up by 700. And we can see that if we look at it, minus 200 plus 900 is indeed equal to 700. And once again, we can do, oops, the balance, subtract 200, and 700 plus 900, whoops, and 700 plus 700 Here's the amount of the liability. This doesn't change at all, and this doesn't change at all. And because we don't have an equity impact, we don't have to put in an explanation. Letter F. Bentley Inc. Returned 200 of defective supplies that were originally purchased for cash. It doesn't say, well, it says they were purchased for cash. So presumably we got cash back. So let's assume that we have cash back. Cash is going to go up by 200. Our supplies are going to go down by 200. There is no impact on liabilities or equity. So we're done on that side. And once again, let's do the math to come up with a balance. 1600 minus 200, we have 1400 of supplies left, 1400 of accounts payable, 20,000 of shareholders' equity, and 2,000 of retained earnings. And once again, there is no impact on equity, so we don't have to put in an explanation. 700 of supplies purchased on credit in transaction B were found to be defective, and they were returned. So that was 700, so we're going to subtract 700 of the supplies there, and of course that means we don't have to pay for them, so we can reduce our accounts payable by 700 as well. And once again, let's do the balances. 1400 minus 700 is the balance in supplies, and it turns out that that's the same as the balance in accounts payable, but it's not necessarily the case. All right. So here we have 22,700, and here we have 22,700. There's no equity impact, so no explanation required there either. H. Bentley Inc. collected 1,400 for commissions earned today. So it says if they collected it, then they must have been collected in cash. And it goes into retained earnings, and it would be 1,400 to balance. And of course, we do have to explain what happened there. So that is revenue and commissions earned. All right, so once again, let's calculate the balances. Whoops. And here we have to do a little bit of math. Our balances are now as shown. They performed consulting services for a customer and received $400. So that means cash went up, and their consulting services are part of retained earnings, and the amount was 400. And once again, we're going to have to explain that because there's an equity impact. It is revenue, and it's consulting revenue. So once again, let's calculate the balances. And 3,400 plus 400 is the new balance there. J, finally, we paid dividends of 2,400 to the shareholders. So it says we paid it, so it must have come out of cash. And of course, that comes out of retained earnings, like any dividend payment. And that's going to be negative. It's going to reduce our retained earnings. And of course, we need to go to equity and dividends. And our final calculation, 23,800 minus 2,400, 700, 20,000, and 3,800 minus 2,400. And we can just quickly check to see if it adds up. 21,400 plus 700 would be, what, 22,100? So 27,000 plus 1,400, the 20 and the 14 agree with the 21,400, and the 700 agree. So that must all balance. Let's see what Lyrics thought of all of that. Lyrics agrees, Lyrics is happy, we're happy, and we're done.